The housing market is starting to heat up following the presidential election. Here's what you need to know. Hey everyone, it's Dave, and today we're going to dive into some key changes in the housing market over the last couple of weeks that could signal a potentially bigger shift as we head into 2025. In today's video, we're going to talk about first, an increase in buyer activity over the last few weeks. Second, new information about national migration patterns. And third, a change in real estate investor buying behavior you need to know about. So let's get into it. First, we're going to talk about buyer activity. The long and short of it is that over the last couple of weeks, we've seen a pretty substantial uptick in buyer demand. The best data I can find for this is coming from Redfin, because there's all sorts of ways you can measure this, but Redfin actually tracks each and every week how many people go on their platform and ask to tour a home with one of their agents, and it's actually up double digits from a year ago. Their Homebuyer Demand Index actually rose 17% year over year, which is the most since January of 2022. And if you remember back to what was going on when it jumped this much last time, it was right after the Fed announced they were going to raise rates, but hadn't yet done that. So people were basically just all rushing in to try and lock in lower rates. And so this is pretty notable that there's been such a big increase in demand for three reasons. First, any increase in home sales right now is encouraging because we're having a very, very slow year in terms of home sales. We're on pace in 2024 for fewer than 4 million sales in a year, which may sound like a lot, but in a typical normal year, we'd expect 5.2, 5.3 million. So it's down at least 20% from what's normal. And any noticeable increase is encouraging right now. The second reason I thought this was interesting is because it's happening even with higher mortgage rates. Yes, the Fed cut their federal funds rate back in September. They cut again right after the election. But mortgage rates have gone up since their low in September, and they've stayed pretty much stable around 7% since the beginning of November. But we are still seeing an increase of buyer demand despite these higher rates. Pretty interesting. Third thing I wanted to point out about this is that we are in the end of November right now, which is traditionally a seasonally slow time of year. The housing market follows the same pattern almost every year. COVID years sort of were an anomaly, but normally things bottom out between November and February. Then they start to pick up, they peak in April and May, and then they slowly go down again for the year. But we are seeing an uptick in behavior right now in November, which isn't very normal and is something that we should all be paying attention to. That said, this uptick isn't altogether unexpected. I actually reported a few weeks ago that Redfin and Ipsos had done a different survey and showed that 25% of prospective homebuyers were choosing voluntarily to wait until after the election to get into the housing market. So this might be the start of a new trend. We don't know, but it could also sort of be just the pendulum swinging back in the other direction, right? We had this really big sort of artificially slow period leading up to the election. So it's possible this is just sort of a rebound returning to recent averages, but it is something I think we should all be paying attention to over the next couple of weeks. So that was the first market update. Second thing I wanted to share with you is some new migration and moving patterns that are really important for real estate investors. Tracking migration is something I've always really liked to do because it helps you forecast and understand where demand for rental units or for housing is going to be growing and where it's going to be shrinking, where people are moving out of. And recently, Redfin put out a new study that shows the top 20 reasons for moving in the next year. And I think if you sort of read the tea leaves here, it can help you understand where demand might be going over the next year or two. So first thing that they showed here was people want more space. This is always the most common one. But I think the thing that stood out to me here is that, yeah, homeowners want more space, but renters actually are more enthusiastic about wanting more space and are moving for that reason. More than a third of renters move because they want more space. So this is something that's important for investors to know because it means that people might be favoring big units. Additionally, over the last couple of years, we've seen this trend where demand has grown the most in the suburbs, not in city centers, which is a reversal from how it used to be in the last sort of run up in home prices and rent prices. And so So to me, this seems to indicate that that might continue because suburban areas obviously have more space. The average size per unit is bigger. So that was notable. I think you should pay attention to that. Some of the other things that you'll notice here, upgrade to better home or neighborhood, that's common. Overall cost of living, that's common. But the next thing I wanted to point out was lower rental home prices. This again is one that isn't always up there, but is popular this year, particularly with renters. Only 11% of homeowners say that they want to move because of lower home prices, but 22% of renters say that they want to move for that. To me, that means that it bodes well for demand in markets that are relatively more affordable. So if you think about places maybe in the Midwest or the Southeast, those might see more demand, but people might move for those lower prices, whereas high-priced markets like in California may continue to see some headwinds. Two more things to point out in this survey is natural disasters. This has really ticked up over the last couple of years, especially as you see these really terrible hurricanes in Florida. But again, there's an important distinction here between homeowners and renters. Renters, because they don't pay for insurance, probably aren't as bothered by natural disasters. And you see that borne out here, that rental units in these areas prone to natural disasters may not see a big drop off in demand. Only 11% of renters say they're moving for that reason. Whereas homeowners, it's more than 17%. But the last thing I'll share that I found really surprising actually is that only 11% of people said that they're moving for lower property taxes. Property taxes have gone up a lot over the last couple of years. And I actually thought this was going to shoot up because property values have gone up so much that it could be eating into cash flow, especially for investors. But maybe it's just not as important for homeowners. And honestly, I don't even know why they ask renters this question because they don't pay property taxes. But that was something that surprised me. But overall, recommend you check this out. We'll put a link in the notes below to the survey from Redfin because I think it tells you a lot about how the average homeowner and how the average renter in the United States is thinking and can help you form your investing decisions. Last thing I wanted to share was some stuff about us, about real estate investors. Again, all this data came out from Redfin. They put out just a ton of good data this week. So all of my sources are Redfin this week. They showed that after a huge increase in investor buying during the pandemic, that the share of total homes that are purchased by investors has come back down to earth. As of Q3 2024, it's about 16%, which is very close to where it was pre-pandemic. Now, of course, this has gone up since 2009, but seeing it level out tells me a couple of things. First, that we're seeing the impact of higher interest rates for longer on the investing market. It's just not as appealing for a lot of people to get into the investing market. And we've seen regular investors go on the sidelines, but I think what we're also seeing is a lot of institutional investors, hedge funds, private equity groups, a lot of the iBuyer groups have slowed down a bit. I think they're going to get back in personally, but I think they've slowed down for now because they're not feeling some sense of urgency that they need to go buy a lot right now. But I do think this actually bodes well for certain types of investors, at least. In one of the markets that I invest in, I primarily buy small multifamily, 2, 3, 4 units. And over the last couple of years, that's been a super competitive asset class. It's been really hard to find well-priced 2 or 3 unit properties, 4 unit properties. But I actually have noticed just in like the last month, basically, that more properties are coming on the market and they're sitting on the market for longer. And I think this could be because there are fewer investors eager to buy right now. And you're starting to see these duplexes and triplexes sit on the market for 30 days, 60 days, 90 days. That's an opportunity for the investors who do stay in the market because it means you can negotiate and potentially buy something for under market value. So I don't know if that's the same on every market. This is a national level survey, but it does pair up with just some of my boots on the ground experience that I'm seeing in my own portfolio. So I wanted to call this out for all of you. That is the post-election update that I have for all of you. Would love to hear from you in the comments what you're seeing in your market, in the housing market, now that the election is over. Thank you all so much for watching. I'm Dave Meyer, and I'll see you next time.